afternoon, everyone, and happy Thursday. Welcome to Stock Market Today. Alyssa Corman and Ken Shreve here to break down the action in today's session, which was not very pretty for the Nasdaq or small caps in particular. But underneath the surface, there was still some interesting action, Ken.
Yeah, that's what we want to cover on these videos. So we'll take a look at UnitedHealth, which reported actually reversed higher and reported pretty strong earnings before the open. And we'll also take a look at eBay. eBay doesn't get a lot of discussion among kind of large cap technology stocks, but really like the way this stock is trading. And finally, DocuSign, which really hasn't looked back since it reported very bullish earnings in early June.
Yes, impressive move there today. But first, let's take a look at the major indexes. Here is the Nasdaq finishing down 0.7% for the day. The S&P down 0.3. IWM, which tracks the Russell 2000, down about 0.5%. The Dow was able to finish with a gain up 0.2%. But once again, Ken, we have the Nasdaq here coming down to its 21-day line, but this time not closing well off of the low for the day.
Yeah, you can see I made a recent trip down to the 21-day exponential moving average and closed up near its session high right there. And yeah, so now it's testing the support level again. Sellers were just around the Nasdaq all day, and I'm not sure if we're going to get higher volume or not. We would if we do get higher volume, it would be what we call a distribution day, but you know, it's just a test of the 21-day moving average. We'll see what Friday brings, but you know, there's just yes, a lot of damage beneath the surface. When you're looking at the large cap technology stocks, we'll look at eBay in a moment. There's a lot of pretty good looking charts out there in the large cap technology sector, but just similar to yesterday, a lot of damage beneath the surface today.
Yeah, and the warning signs have been there. We've been talking about how the Nasdaq in particular has been extended, that shakeout last week wasn't really much of a shakeout. Stocks that had been working were still extended, but seeing us come down to the 21-day line here, not all too surprising. Breadth is not that strong, but we will be monitoring the setups that are forming. And let's also take a look at the S&P 500 here, down a little bit. So touching its 10-day moving average here, Ken, not quite down to the 21-day line, suffering damage like the Nasdaq.
Yeah, I mean, when you look at charts of the S&P 500 and the Dow, I mean, they both look very similar. These are just tests of the short-term support level, the 10-day moving average. So we'll see, you know, if the Nasdaq eventually breaks the 21-day line. I mean, we've been expecting a little bit of consolidation here after such huge gains last year. And, you know, with the Nasdaq, what's interesting is its 50-day moving average. That's the red line. You can see how it's pretty much sitting right at that 14,000 level. So you'd expect that to be a pretty legitimate support level to hold, and that would be a pretty, you know, steep pullback down to that level. But let's see if the Nasdaq can hold support here. But you know, again, the S&P 500 just testing the 10-day moving average, and the Dow is pretty much doing the same thing.
Right. Support here at the 21-day line would be great if we can, you know, keep this power trend going. But you know, that would hurt a lot to see us come all the way down to the 50-day. We'll have to see. But let's take a look at UNH and the very impressive upside reversal that we saw for this medical sector name, closing up 1.4% for the day after its quarterly earnings report. And we saw an acceleration, yet another quarter of acceleration for top line growth, a decline on earnings, but still investors liked what they saw in the report.
Yeah, people last year were, as we well know, were pretty much just staying at home and not really going to the hospital that much. But so that was a big reason behind the earnings decline. The $4.70 a share was actually better than expected, and you noted the another quarter of accelerating revenue growth. And I like the annual estimates here too. Remember, this is a very, very large company and still expected to grow earnings 10% this year and 15% in 2022. too. So it's in a good setup here. This is a nice reversal higher today. This is a classic base forming. Could be a launching pad for a breakout. But as we talked about on IBD Live today, it's such a kind of a low volume time for the market. It's really not a time where we're seeing, true institutional buying happening in stocks. So institutional buying is what really fuels breakouts, and we'll see if UnitedHealth Group can eventually break out from this base, but we'll need some pretty heavy institutional buying for that to happen.
Just 1% below the pivot of 426.08. And next on our list is eBay. We don't talk a whole lot about eBay, or we haven't, at least lately. 59 RS rating, but it has been on the move as of late. A nice streak of gains here in mid-June. And it looks like, Ken, this is a pretty orderly pullback, culminating in today, support at the 21-day line for now.
Yeah, very orderly pullback. And again, that RS rating of 59 isn't great, but I really like the fundamentals here. And there's a good story going on at eBay too. I mean, there's definitely the new going on. This company recently just got rid of its classifieds business. It also got rid of the StubHub unit that it owned, and now it's really just focusing on its core marketplace business. And look at what this has done. It's really resulted in strong top line and bottom line growth. I love the annual estimates here as well. 14% growth this year, 16% growth next year, and it's a $46 billion market cap company. So, I like the fact that the stock is holding near highs here, and I think the stock looks pretty darn good technically.
So then where would you buy if you saw a continuation of the move to the upside tomorrow, or would you want it to get back above the 70 level? Where would be a good entry?
Well, this is one that I'm. It's just on my watch list for now. I'm not really one that likes to buy off the 21-day line. I know some traders like to do that, but ideally, what I'd like to see it do is just kind of move sideways from here, consolidate gains for a little while, and then maybe it'll make an effort to break out over that 70 level. So maybe a few more weeks of consolidation in preparation for a move over 70, and it would get more interesting.
Okay, and DocuSign, a name that got attention on IBD Live once again today, an impressive upside reversal for the stock. Only closed up 0.6% on the day, but relative outperformance here, Ken, for this tech name in the enterprise software group, holding up really well after just such a huge move in June. 20% up the day of its quarterly earnings report, up some 40% for the month of June. And looking at the volume down there, not seeing a whole lot of big red. It's the blue volume that is notable.
Yeah, no, then that just points to a stock under accumulation. We added this to leaderboard, like I said, in early June. The last time it reported earnings, it gapped above its 200-day moving average and crossed that 236 level. It turned out to be an excellent entry point, and it's rallied since then. And this was a stock today that tried to sell off with the Nasdaq, but reversed higher off the 21-day moving average. And I think this is a company that is still, as you well know, you interviewed the CEO recently for Investing Strategy, and he talked about the opportunities that exist. I know international markets are still, relatively untapped for DocuSign. I think about 20% of their sales right now come from international markets, so that's a growth area. And this whole contract life cycle management market, which is a heck of a lot more than just e-signatures, is still a way that DocuSign can grow the top line and bottom line. So this is a stock, again, we're holding the position on leaderboard. We're not adding to it now, but again, if we just get some sideways consolidation here, maybe get another chance to increase the position.
Yeah, and with today's upside reversal at the 21-day, with volume that ended up being a little bit higher than average, warranted it being added to Swing Trader. And we have our monthly Swing Trader scorecard webinar happening here in the next 15 minutes or so. So if you are a Swing Trader subscriber or a trialist, head on over to swingtrader.investors.com for that. Justin, Chris, and myself will see you there shortly. Ken, Always appreciate your spot on analysis. And thank you all for tuning in. We'll be back with more tomorrow. See you then.